Oh, it's me. All right. Hello, everyone, and thank you for joining us on the YouTube Live. I was watching this screen here and not my camera guy, and this one still said I had a few seconds left, so I apologize there. I'm a few seconds late, paying attention to the wrong person. Today, well, before we really get started, is my audio coming through clear for you? I just want to make sure my audio is coming through. So you guys just let me know that in the comment section there if it's coming through. Again, there's that slight delay. So I'm going to get going, but then I'll check back to make sure my audio is working for you all. But today we're going to be talking about what happens when the market closes. Not market closures as in it's 5 o'clock Eastern time and the New York market is closed or anything like that. But what happens when the market goes into hiatus, market decides to shut down. Most of you probably know, you may have seen the news, and for those of you who may not have, President or ex-president, president still, George H.W. Bush died a few days ago, a few months following his wife actually. And as a tradition dating back to Lincoln, when a president dies, the markets in the US at least shut down. So there is no stock market today. New York Stock Exchange, NASDAQ, they've all closed down. They've all put themselves on hiatus. Looks like I'm getting those audio comments in, so audio's coming through all good there. Yeah, so the markets, they get shut down. President Trump had signed an executive order the other day declaring today a national day of mourning for President George H.W. Bush. So you'll see flags at half-mast, and you will also see probably a slowing in the market. And so today we're going to talk a little bit about why the markets close and what to do when they close. And so there's 9 holidays in the US where the US market will close. Those holidays are in order from the 1st of the year to the 25th of the year. New Year's Day, the market will close. They will close on Martin Luther King Jr. Day, President's Day, Good Friday, Memorial Day, Independence Day, Labor Day, Thanksgiving, and Christmas. Sorry, I was trying a bit of a lapse there. But those are the 9 days, scheduled days where the markets will close. No stock floor, very slow Forex. Of course, we can still go and trade the market as we are doing today. We're possibly doing today if you are trading today. But there's no big banks in it. Those big banks, they shut it down. And so what that really means is you'll see really 2 things in the market. You'll either see almost straight consolidations for the whole day, since the big banks, which are closed, the stock exchange is closed, not too much movement in the US dollar or any currency which you may be trading a holiday for, with the US dollar and the pound and the euro being the biggest ones when there's a London holiday or a US holiday. But what you'll either see is straight hiatus, just sideways movement, no real, nothing happening because those big banks are taking a break. Or there is also the possibility that you will see just some really rapid movement. Not throughout the day, but there will be peaks where there's this really quick movement in volatility and everything like that in the markets, really big jumps in the market and everything like that. So let's go ahead and we'll open up Alveo now and look at some of the US markets, look at what they're doing now, sort of talk about how we may trade those. And then also we'll bump it to a larger time frame. We'll put quite a bit of order history on there, or history on the chart, so that way we can look at those different days which the markets were closed and how they acted. So let's go ahead, open up Alveo here. I got it open on this computer. Happens to be New Zealand US is the first market that popped up. I'm going to bump up our candles a little bit though, give us 500 just to look at the day with. And so New Zealand markets, most of you, or if any of you trade those New Zealand markets, you're probably familiar with the rapid movements that occurs. And so if we just look at highs to lows of this New Zealand market, over the course of about the day here, we reached a high here, low here, and so we've only moved 40 pips. This is in just under 300 minutes, which is not typical for the New Zealand dollar. New Zealand dollar moves, really fast. And so for those of you who, if you're in Trader in the Street or If you're a subscriber to Trader on the Street, you can watch Sean sort of trade his wobble technique with the people on Trader on the Street. If you're not, you can go to traderonthestreet.com and sort of there's videos up there of Sean using the wobble technique. That's going to be that sort of short-term scalping, building positions, taking away those small positions, things like that. It's going to be one of your better bets for how to trade these consolidating markets. You can't do too much longer term. What you can do though, however, is since the market is closed, there's no market conditions happening, not supposed to be market conditions happening, for the US dollar. You can treat it almost like a weekend. And so, coming back on Sunday when the market opens on Sunday to Monday, depending on when you log in and start doing your first trading, there's usually that gap in the market. Depending on the pair, such as with New Zealand pairs, pound pairs do it a lot, sometimes the Swiss pairs as well, they're really large jumps. They're pretty substantial in size. Euro, not too much with like the Euro USD, things like that. But pound, New Zealand, Aussie dollar, Swiss franc, they usually have some pretty decent sized jumps. And so one of the things we can do is we don't want to do it too early in the day, especially since, like we said, there are those big spikes in the market movement. I apologize, someone's calling me. There we go, just ignore that. There are those really large movements in the market sometimes, and a good example of that is if we look at, I believe it was the Canadian dollar that I was looking at this morning. Canada this morning, Canada released their interest rate announcement. They kept their rate stationary at 1.75%, which was right on par with the forecast. However, what the big chunk of movement from the Canadian from that Canadian announcement was the rate statement. So not the interest rates, but the rate statement. And that really released what the Bank of Canada is looking for in the future to change interest rates. And so with that happening, we saw, if we go look, we have this area of very little movement, 21, 22 pips, oscillating between that for a whole, over 250 minutes. So over, what is that? That's over 4 hours of just sideways movement. Announcement came out. We saw a really good spike there, about 112 pips, all within the course of 30 minutes from that announcement. And then we start going pretty sideways again. We're moving about 30 pips here, so a little bit more than our 24 here, not by too much. And a lot of this is just backlash from that announcement there. And so looking at the news is going to be a big part of what to look for. Even just a few minutes ago, I believe the FOMC was supposed to be looking at the beige book, and if we open this up, I'll be able to tell you for sure if I have my times right here. Wednesday, markets closed, so it says the markets are closed. Fed's beige book, there we go, 1900 hours GMT. So the Fed's beige book, this is what the FOMC looks at to sort of distinguish if they should change interest rates in the near future, how much they're going to change them by, how near the future they are going to change them by. And there was I believe it was Jerome Powell. It might have been another Fed member, but I believe it was Jerome Powell. It was not actually. I don't remember who it was, but I remember it wasn't Jerome Powell. But they had said that there will be a time in the near future where it will become more obvious that the U.S. does not need to continue to raise its interest rates, giving a pretty strong implication that we will have interest rate rises to come soon. And this beige book will really just reinforce it. There are two other books that are released with the beige book. They are not talked about on the news announcements though, because they are more private. It is green book and a different color book. I'm having trouble remembering. But the green book and a different color book that the Feds all use for their FOMC. And so looking at these news announcements, these are going to be where you're going to see those spikes in volatility. Since we are in sideways moving markets during the holidays and during days like today, where we are, mourning President George H.W. Bush, we have those typical sideways movements. And so we can treat those very strongly to the consolidations that we would normally trade even if the markets aren't open. Since they are news announcements, though, we do get a lot of that whipsaw. So keeping your take profits somewhat closer are going to be good for days like this. When it comes more so to days like the holidays, with Christmas Day coming up, New Year's Day coming up, a little bit later in the year when we'll see Martin Luther King Jr. Day and President's Day, where it is a scheduled shutdown, you'll see consolidations happen a lot more strongly on those days typically, and there won't be these same news announcements. We did not know George H.W. Bush was going to die. It happened, sadly. Today's a national day of mourning in the United States, according to the executive order signed a few days ago, but it wasn't scheduled. So there's still stuff that is announced. All federal employees got the day off, unless they were required for national security, very important federal things like that. Supreme Court, they're on hiatus today. They paused their hearings for President George H.W. Bush and all that. So it wasn't, we couldn't have planned for this weeks ahead. We can plan for the markets shutting down in 5 years advance for Christmas Day, for Thanksgiving Day. We can't do that with a death. And so those consolidations during holidays are typically a lot stronger. And if we jump back, let's go ahead, we'll bump up our time frame a little bit, and let's look at the last holiday we had, which was Thanksgiving. So let's bump it up to a 1 hour and see if hopefully I didn't do the math in my head before I came, so we'll see if oh yeah, that's, way more than enough days here. So last closure, November 22nd, was that Thanksgiving Day? Whatever Thanksgiving Day, I get it confused with my brother's birthday all the time, so somewhere in this area here, we had Thanksgiving Day. If I was right that it was sort of 21st, 22nd, I think it was. Do you know when that was, Keith? Was that Thanksgiving? Someone's checking. Let's see if does anyone in the comments know when Thanksgiving was? You'd think I'd know these holidays, the dates they happen better in my head, but like I said, my brother's birthday's right around there. So it was the 22nd. I did have that right. My brother's birthday is the 27th, and I get those confused a lot. So bit of a going off course for me. I apologize right there. But if we go look, we're having 22nd. So here we're on an hour chart. And that day we have, once again, we're on the US CAD. And so I believe the Canadian dollar was closed, the Canadian market was closed as well. But still we get that little movement, 12 pips over 13 hours. Even if we go all the way to here, over on this, right where we had this bearish drop, we have our high right here. So the biggest drop that happened in that course of time was about 30 pips in the course of 4 hours. And so this is where that sort of breakout trading can come into play, and we go in. So let's zoom in a little bit more on that consolidation. And this is on an hour chart too, mind you. If you're trading something smaller term, which is usually a little bit more common on these types of, a little bit more common to trade something a little smaller term. We just had to jump back to an hour to see the movements. We have this consolidation going. These red lines are about where I would have put my buy stops and my sell stops personally, I'd say. A little bit below the wick, maybe a little lower, give myself a little room, a little higher. Would have triggered into that buy stop. Nothing I could have done, a little bit of a wick there. We do have those spikes of volatility in the market on those days. And just that one candle, that 1 hour, was about 15 pips. Which is not uncommon there. It looks like for this holiday here, we got about 12 on that candle, 7 on this candle, about 11 on this one, so not uncommon. It just happens a little higher than normal. Typically those jumps will happen. So I possibly would have triggered into that buy stop, gone, hit a stop loss around this area, triggered into that sell stop there, and caught this movement. Once again, nothing huge, about 34 pips. If I happen to catch it all the way to the very bottom, I probably would have caught not that much personally. If I'm telling you guys personally, I would have put it right about where these candles are over here, which would have been right here. So I would have made about 23 pips, lost about 25. So I would have been close to break even. Once again, if I were on a smaller time frame watching this, I'd be able to better monitor those trades, but we can only tell so much what we would do in retrospect, unfortunately. but about break even if I just went strictly for take profits and stop losses. I don't mean to be coughing right in your guys' ear. But that's really one of the things you'll see. You'll see that consolidation. Get ready to buy stops, sell stops, and get ready for that. Otherwise, each of these candles, each hour, we're getting 15 pips from high to low. So, let's say it just went straight high to low, low to close. So that's just this candle right here, 14 pips, and then about 7 pips. So 21 pips right there in that 1 hour. And that's if there was no other intermediate movement we could have caught. Once again, if you're trading something more like Sean, who's doing that wobble build, wobble fade, which he discusses on the Trader on the Street website, you'll see those numbers can increase. I personally am a little bit longer term of a trader, so I tend to stray away from these holidays, or if I do trade them, it is with these buy stops and sell stops. But I'm waiting for that more market break, which we catch on the weekends. And so if we look at a different pair that would be a little bit better at visualizing that. Where am I going? There we go, New Zealand. I was right next to New Zealand, US. It's typically a good one to demonstrate those weekend jumps. For those of you who trade the New Zealand, you probably know. Here's one right here, that one was actually pretty small. That one was about 5 pips there. Another one happened right here, open to close, about 16 pips. And this is close to that Thanksgiving holiday also. Here we have quite a few jumps actually, and these aren't all the weekends. Right there we have about 10 pips, so the New Zealand will jump somewhat frequently without that. But with any market closure, and most of you who are trading the weekends, things like that, we have about a 24 pip jump there. You know that typically it's not recommended to hold those trades over the weekend. Same things happens for the holidays. And I feel like this point right here, I'm sort of drilling in. I feel like a broken record on this topic right here, but those consolidations you'll see, a little bit of one right here. Looks like this might have happened on a Friday. Market jumped on a Sunday, and so this is one of those things you can look for when it comes to coming back from a holiday. Markets are closed, markets reopen. Anything that happened on that day of closure, you're going to see the stock market jump. You'll see the Forex market jump as well, because there was news that had affected all of those, but there was no one to really trade and announce those new prices. So they all happen at once. And it's pretty much like the jump you'd see in a high volatility event. It's an interest rate announcement pretty much, over the course of a day, because instead of one large announcement, you have 10, 15 smaller ones. And so let's go ahead though. We'll jump back. We'll look at especially with Christmas coming up. Let's see if we can go back a year. We'd have to jump up quite a bit. Does a 4 hour show it? I don't think it does, but let's see. With Christmas coming up, one of the things you can do is look at the previous trends. Oh, it looks like New Zealand's not giving me that much chart data. Let's switch to something a little more common, see if it gives us more candlesticks. If the LP likes us a little better on Euro US. Nope, it's not looking like the LP is going to give us that much data, unfortunately. Other platforms, though, will give you more data than the LPs that Alveo currently uses is giving you. So you can look at other platforms. One thing I'd also recommend is before the holiday, a lot of times the holidays will have a similar impact on the market as long as there has been relatively similar news beforehand. So if you are someone who really wants to go trade those markets, you do want to try some shorter term scalp strategies possibly. I'd recommend looking up what happened on that market. If you go to the Cat Tools class, Monday, Wednesdays, and Fridays at, I think it's 6 a.m. Mountain Time, 8 a.m. Eastern Time with Jeff, he does a lot of looking back at historic events and doing technical analysis of that. Holidays are going to be no different. Go in, look at what happened on December 20th through 25th last year. Look at December 20th through 25th the year before. See if there's similar trends. If there's not, check news events. Go back, a few more years. Look at the 20th through 25th for 5-6 years back. look at those and see what news events led up to that holiday. If in 2016 that was the only year with an irregularity breaking the trend, look back, you might see that on that day the US raised interest rates a few days before Christmas, whereas all the other years they remained constant. Things like that will all affect the trading. So typically markets go somewhat sideways since all the big banks are off. They're not trading the markets and they're the big movers. But there are the possibilities that there will be a spike. You know, something will happen. Announcements still are made, and if you get everyone trading together, they have a little bit of a pull. You know, I mean, they're not. You know, it's not like the same as getting three big banks together, but getting a group of people, you know, all the traders together, still does have some pull. So you will still see some jumps, especially with news events. Things like that. The markets still do move. We see that on our screens now. So they do move. So just get ready for that. Analyze the news events that happened before that and things of that nature. So before we wind down, if you guys have any questions, feel free to type those out. Right now, I'm going to go look and see if I missed any of the questions. And then I'll give you guys a second to type them out and see if you know, let that YouTube delay get going there. All right, looks like I didn't miss any questions. Oh yeah, okay. So Ashley asked if we can look at the CAD Swiss. We can take a quick look at the CAD Swiss. Both of those markets are open, so that won't have too much of an issue with what's going on today. While this is loading and we're waiting for the rest of the questions, if you guys have ideas for what you want for our YouTube lives in the future, sometimes Sean and I will struggle on a Tuesday evening discussing what we should talk about on Wednesday. Yesterday was no different. Sean's in Colorado right now, actually. That's why you're seeing me. I don't think I said that at the beginning. Sean's in Colorado, so. But we were still discussing last night what would be a good topic to talk about, and we decided market closures would be appropriate for today since the market is closed. But we would really appreciate sort of you guys letting us know what you want to see. So put in the comments what you'd like to see in these YouTube lives. That way we can get you guys what you really want there. And also, you know, subscribe to the channel. That way you'll get notifications when we get live. And if you just give us a like on these videos also, that lets us know that you do actually like coming to these YouTube lives and lets us know that they're actually something beneficial for you all and something that you'd like to see continue going on. But now that my chart's loaded, all that, I'm done with my my little spiel there about, you know, help us out on social media with what you guys want to see. So coming here, CAD Swiss, looking at that, I'm on the 4 hour. I'll change time frames in a second here too. If you have a specific time frame which you were thinking, Ashley, you know, feel free to put that one down there. But looking here, it looks like we had a potential for a descending triangle going. So the triangles are when you have an area of the high support or resistance going on, and then you have a trend line going and meeting it. Typically, these descending triangles, we have that bearish trend reaching a consistent support, will break through the bottom, will break through that support. Bullish one, where we have that area of high resistance on the top and a more upward trend, will break bullish usually because the price keeps trying to drive in that specific direction. So going on here, this first triangle we have forming right here, we're getting ready for that breakthrough at the bottom. I would, at least on the 4 hour. Then we get the hammer going on right here, keying us into that reversal. Really gives us another point for that triangle. So getting ready, sell stops below these support, sell stops below the support, buy stops above those resistance points are going to be really good for these ascending and descending triangles. And so we'd have that sell stop down here below. Wouldn't have triggered. We had that hammer driving price up, formed a new sort of falling triangle right here, descending triangle, however, whatever terminology you use, driving price down. This one we did break through. If we go look, currently we've only broken through about 21 pips, so not bad. You know, we do, oops, this mouse is very difficult to do a 2-finger click with. Looks like we're sort of stuck on this bottom because I can't do a 2-finger click on this mouse. Or a right click, I'm sorry, right click. But we're driving through, driving down. We do have some of these high wicks going. We have a doji up here, some high wicks going, driving that price down. Once again, Canada and the Swiss market are both open. A lot of this movement, this one in particular, is the Canadian news announcement going, which really just helped drive it down to what it was doing. So this one, I'd probably, be looking on that bearish side. If you're in the bearish trade, possibly don't close out yet. Maybe move your stop loss a little bit below there, so you're guaranteed that profit with that stop loss in the profitable range. But with these markets open, it looks like the Canadian, excuse me, Canadian dollar lost some strength here, but that news announcement really just further pushed in a direction which the drawing tools here are sort of showing us. So probably not closing out yet, but be watching soon if it does decide to reverse because of that announcement. But also once the markets open up tomorrow, we have US open again. Even though US dollar is not in this pair, it will still influence the Canadian market and the Swiss market. So, watching tonight, especially right before you go to bed, make sure you have stop losses in place for profitability if you're in that sell, if you caught that breakdown. And otherwise, just be aware in the morning that you may see that shift going. So, cut to a few minutes. Okay, so Samuel asked what happened to all the Trade on the Street videos. They used to be well over an hour and they were cut to just a few minutes. So those are all on, they've shifted those all to traderonthestreet.com. So if you are on tradeonthestreet.com, the thing is they took the longer ones off just so they could sort of edit them up a little bit. They're changing the coloration because some of the color, Sean, like myself, being an Irishman, very pale. The sun does not do well with us. So they sort of had to take some of those down. They're adjusting the colors, things like that. They should be back up on Trader on the Street soon. As far as the editors go, I don't know how far along they are, but those videos, they will be on Trader on the Street soon, if they're not already. I can talk to a video guy when I go upstairs and see for sure. And that way, next YouTube Live, I can, if it's me, I can give you an update. If it's Sean, I can have him give you a little update. But they should be out soon. So, but yeah, they just cut those 5-minute ones. Those are a lot easier to get the coloration down, you would probably guess, since they're a lot shorter. But yeah, so that's what happened there. Let's go ahead and see if I missed any. So how does Alveo calculate the horizontal grid lines? So these horizontal grid lines here, these are, they're just calculated. So what it does is if you go into your template settings, one of the things you see is your top chart space, bottom chart space, left and right chart space. So what these are is this is how much room you have extra on either side of Alveo, how much room you have on the top and bottom. And so what it does is Alveo takes the highs and lows for the range you're looking at, adds on that top and bottom chart space, and then it just adds the lines where it just divides up the lines equally. And so like if we were to expand this, we'd get a few more lines. The chart expanded as well, so the difference between these is a little less now. The bigger it is, the less that's between these. That's really what it does. It takes the highs and lows and it calculates an area of this much distance, regardless of what size we have our chart at. Those lines are the same distance, and then it just appropriately at that point divvies up the numbers. That's how it calculates those grid lines right there. So yeah, it doesn't actually have much to do, surprisingly enough, with support and resistance points. It is just based off of highs, lows, and adding the appropriate amount there. So. This iPad's giving me trouble here. There we go. So yeah, like I said, there are a few Trade on the Street videos missing. A lot of them is just editing them together for color. Some of them, if you've watched some of them live, since they are, on the street for the most part, some of them are in hotels and stuff, but, try to get them out in the open as much as possible. Finding people doing them on the street there. There's just outside audio, cars, birds. I think at Dana Point there were crows in the background that were driving everyone crazy. So they take them down, they try to edit that stuff out as much as possible. So that's really where much of the lapse is. But like I said, I'll talk to the editors who are doing those videos, and either Sean or I will give you an update next YouTube live on what is happening with those Trader on the Street. Like I said, I know some of them are on tradeonthestreet.com. I just don't know which ones there are exactly up there. But yeah, Sean or I will be more than happy to give you an update once we have an idea. Sean may know, I just don't. But next YouTube live, we'll definitely sort of give you an idea there. So, what is the tap room? So the tap room is it's the Trader on the Street version of it's like if you receive the daily buzz emails. Which is sort of Apiary Fund sends out an email talking about market conditions, also sends out videos, things like that. The tap room is the Trader on the Street version of that pretty much. So the tap room is Sean sort of writes an article discussing what's going on in the markets, things like that. So Apiary Fund, the articles talking about what's going on are written by different instructors. Sometimes myself, sometimes just other instructors, sometimes Sean. The taproom ones are written pretty much only by Sean, unless he's out of town. Then one of the instructors may have to cover if he didn't write something in advance or can't write on the road. But the taproom is it's a sort of a get-together of, without the alcoholic beverages, it is a get-together of people in Trader on the Street, sort of getting them together, sort of talking, getting articles out there from Sean. And sort of talking like that. And you can get, I think there's more information, probably a little better description than I was able to offer on traderonthestreet.com. And if not, I can talk to the person who's making that website once again to get a better description on there and talk about all the benefits of that. And once again, an update on next YouTube Live will come. Looks like we have a lot of Trader on the Street questions actually, so that might be a good topic for the next one. I don't know. Once again, if it is, put in the comments what you'd like. If you'd like to see a YouTube live where Sean pretty much talks about Trade on the Street, the path it's going, what updates are on that, just put that in the comments also so Sean knows that I'm not just making crap up and that you guys actually want to see that. So otherwise, looks like we'll finish up for the evening, or the afternoon. So thank you all for watching. Once again, like, subscribe, let us know you like these videos. Let us know in the comments what you'd like to see. Otherwise, thank you all for joining us. Hopefully the markets aren't too boring for you today, and happy trading, everyone.